The commodities downturn continues to cause pain. Diversified South African miner African Rainbow Minerals reported headline earnings down 58% to $1.74 billion. This is for the year ended June in 2015. A downward spiral in global commodity demand prices hit the company hard. However, the weaker rand helped to offset some of the losses. Despite the poorer earnings, shareholders still receive a dividend of 350 cents a share, 40% less than what they were received the year before. And Nompumelelo Siziba caught up with the ARM CEO Mike Schmidt and first asked why the loss was so material.
It's abundantly apparent if a person looks in the global economic mining environment. There's been a massive oversupply of material, a downscaling, and so as ARM, we cannot buck that trend and commence with that. However, I would like to add at this point is that I'm very pleased the way that ARM operations have reacted to this in a proactive manner. And as a net result, we have very robust financial position and very pleased to be able to announce a 9th consecutive dividend of 3.50 Rand this morning.
Mike, given the fact that commodity prices have plummeted so much, what is it that you at ARM have been doing to contain or maintain operational efficiencies? Well, the reality we have to work with is the current reality, and that's the pricing environment we're in. So we have to be lean, we have to be mean, we focus on optimizing cash flow, we look at our cost position, and I'm very pleased at the way that the operations have responded in terms of the costs. In the South African context, we know one of the things that concerns us are job losses, and in the mining sector, we know that a lot of jobs have been threatened. Has ARM had to consider that route at all?
ARM does take this very seriously. I mean, we're in the long-term game, and jobs and job creation is an important component of us. But at the end of the line, we've got to be responsible to shareholders and the sustainability of our businesses. So we've had to close down some of our smelters to date because they were uneconomical. And obviously that has led to job losses. We are busy with a number of restructuring programs right now in a number of operations that need to be rationalized, but we are not in the position of cutting jobs at the other operations as of yet.
We know that the Chamber of Mines and Government and Labour signed a 10-point plan recently to try and save jobs in the mining sector. And one of the ways that they plan on doing that is rather than making somebody completely redundant, putting them in other places in the firm. Is this one of the strategies that you'd employ if you were to consider making some retrenchments?
Absolutely. I mean, the retraining, repositioning, offering alternative positions is very key and reskilling is very key with ARM as part of that, as a joint signatory to that 10-point plan.
So last but not least, with commodity prices or the prognosis thereof not looking very good for the foreseeable future, what then is ARM's strategy?
Yeah, I think we've adopted the philosophy of lower for longer. And so we have to get ourselves into a lean situation and make sure that we correctly position for the long term. So a person doesn't want to take decisions now in the short term that will destroy the long term. But at the same time, you cannot have a long-term prognosis outlook when you're struggling in the short term. So it's really a balance between the two.